Hi, and welcome to today's event with Agillic. With me today I have Emma Gursoy, the CEO of Agillic. Today we will primarily be looking into the first quarter, the numbers, what has gone good, what has went well, and what has not went so well, and put it into a conjunction with the 2.0 reboot strategy that is running 2 years, and also this year's expectations, to put it in a little bit of a context. As always, you're very welcome to ask questions out there. You're very welcome to ask them in Danish. I will translate them and then ask Emma on English, but you're very welcome to ask the questions in Danish, but the event will be in English in general. And always just ask through the presentation. I will make sure that we get to every questions, even if we don't catch it during the presentation here, where Emma will go through the presentation. But Emma, can you take it from here and help us into your quarter?
Sure. Thank you very much. Thank you for the introduction, and thank you for doing this also in English. It's one of the requests that we have seen in the market. There have been quite a lot of increasing interest from outside of Denmark for the conversations that we have been having here with this platform. So we have decided to do this in English to spread the news in general to a greater geography. So I wanted to start the conversation forward with first of all, let me just start with a very short introduction to our company for those who have not been exposed to that earlier. We are a software as a service platform operating internationally within marketing technology category. Our omnichannel marketing automation platform, which we call Agillic, enable companies to automate and personalize communications to their customers through all digital channels. Now, why is that important? It's because delivering the right message in the right channel at the right time forms the basis for optimizing response and conversion rates for our customers on their sales results. So we actually work to make an impact on our customer sales results. Our total in 2020, our total revenue was 50.5 million Danish krone. All the numbers I'll be speaking about will be in Danish krone today. 100% of our revenue is generated through subscriptions, and we are listed on the First North as of 2018. Our platform is fully scalable and global. Currently, we are servicing customers in 11 markets with strong penetration within retail, finance, subscription, charities and NGOs, and travel and hospitality and leisure industries. As the demand for the personalized and relevant communication from end users increases, so does the interest to Agillic solutions from the companies. Although we are a technology company, our interest remains solid on delivering results through our technology impact to our customers. Hence, our strong focus on customer business results with higher conversion, better retention, and increased customer lifetime value. These are the terms that create real business impact, and that is the reason our customers choose to work with our platform, our technology. Now, in Q1, let's just jump into the numbers from our Q1 results. In Q1, I've highlighted 4 areas that we are quite proud of. What you are seeing is quarter-on-quarter results. And the first box with 11.3 million, that's our revenue from subscriptions. It's the second highest quarter result since our IPO. The second trend that you can see, increasing trend, is our gross profit of 11.2 million. That is again the second highest quarter results since our IPO. The third, moving from red numbers towards the positive numbers, that's our EBITDA. We have resulted in Q1 with 0.7 million, which is the highest EBITDA result that we have had since our IPO. And the last one is the number of client contracts that we have. That's 86 as of Q1 in 2021, and that's the highest number of clients that we have ever had since the IPO. So considering that we are still operating under COVID-19 impacted markets, we are quite pleased with the performance on quarter-on-quarter improvements. If you look at our key financial highlights, Compared to Q1 2020, that is prior to COVID-19 impact starting, our revenue declined from 14.7 million down to 12.6 million. This is mainly due to the business impact of COVID-19 on our business, especially within travel and hospitality leisure industries. They represent quite a portion of our business in general. We have in 2020 retained most of our clients within this territory, but we have accepted the decline of their business status so that once the business comes back, we look forward to seeing their results and subscription fees increasing together with that. Our EBITDA increased, as I mentioned, to 0.7 million. That's an improvement of 1.1 million compared to last year, same period. And with the successful capital raise of 11.6 million in January, we also have a strong foundation and a cash position to pursue strategic growth and internationalization plans. As of 31st of March, our cash at bank amounted for approximately 24 million. If you look at our SaaS highlights, key SaaS highlights, in Q1, we successfully renewed and uplifted many existing clients. In addition, we have had 5 new client contracts across several industries signed, and they are also both in Denmark and in other European markets. In Q1, our ARR, annual recurring revenue from subscriptions, increased 1.7 million compared to Q4 2020, corresponding to a growth of 4.2%. Now, the reason that we are comparing both to Q1 last year and also Q4 last year is because there's a COVID effect, and we are trying to like-by-like comparisons and then trends. So that's why we keep referring back to 2020 Q1 and 2020 Q4. We are pleased with the fact that Q1 is our best quarter-on-quarter performance since Q4 2019. And this is also the second quarter in a row our ARR subscriptions are on growth. We are looking for higher growth, but we are on the right trend. In Q1 2021, our total ARR is 46.6 million krona. As mentioned before, we're still operating under the long tail impact of COVID-19. I mean, those of you who have been following in Denmark right now, the market is actually opening as of this week, end of this week. The fitness centers, which we have a lot of customers within that space, they're opening up for the first time after many months. In some of the other European markets, they are still under the restrictions. So, as I call it, against all odds and against all the impact that we have, long tail, we are quite pleased with the trend, that uptrend that we have created. And also, we also see that transactional fees that on our subscriptions and transactional fees, the transactional communication volumes have been down, but we know that it will be up once the market situation changes accordingly. Overall, if you look at based on our Q1 performance and our local foundation and global outlook, we retain our forecast and financial guidance with 49 to 53 million on revenue, -5 to -1 million on EBITDA, and total ARR from 50 to 56 million for 2021. We also retain our financial goals in general for both 21 and going forward, which we have established with our Reboot 21 exercise, is double-digit percentage growth rate in ARR, subscriptions, and positive cash from operations, and positive EBITDA. So we are following up on all parameters collectively. Now, if you look at, so what's next, what's coming, is, our growth strategy is based on local and international sales increase. That's our main focus. We execute this plan with a dual go-to-market strategy based on direct and indirect partner-driven sales. Already today, we have a strong footprint with our partners in several markets, strong penetration in Denmark, naturally, and also on the international markets in UK, Germany, Switzerland, Sweden, Norway, and US. All these markets are key focus areas, and our dual strategy is in action. Our Reboot 21 strategy and investments are also in execution. So far, we have had very positive response from our partners on Agillic's go-to-market strategy and growth ambitions. In this channel, we have had, together with Michael, a conversation with 2 of our partners in the 20th of April. If you have missed it, please do look at the video. It is them who's telling why they see the value of, how they see the value of Agillic and what kind of value Agillic adds to their clients. It's told in a very unique and a business-driven perspective, which I certainly recommend you to watch. As of end one, we have also completed our partner success program. It's fully rolled out now across all geographies. And our unique proof of concept offering is in action in multiple international markets as we speak. This is something that I look forward to opening up further into details in the upcoming quarters. On the investment side, our increased marketing activities. We are actively looking into multiple markets, and we are activating Google Ads and search engine optimizations to maximize the impact and increase awareness around Agillic name, our platform, our values, and our business impact that we create. We are looking into, which I call innovative commercial models with our partners, technology partners, referral partners, into new ways of adding value to the clients and creating business opportunities from that collectively. On that one, I will highly recommend you to see another very strong webinar we have just done last week together with our CDP partner, Telium, and the clients that we're working with together with them, and the impact that we create and the impact that we create in the speed that we created. And our continuous investment on talent, and that is mainly going on to two specific areas, that's sales and technology development, both locally and also in other regions. We have been running a pilot project with our nearshoring activity in Romania in the last couple of months. It's just been completed with a success. Now we are opening up our second technology development unit, and that is very important to mention that it is in EU. It's an EU-based location development hub. And why is that important is because I will also speak in a minute, but let's take that one now. It's more and more EU-driven, focus on GDPR compliancy, general data protection regulation focus, and data processing agreement requirements and compliance from our clients, especially in the other markets such as Germany. There's a high top-level focus on that one, which requires our development and data to stay within EU. This is becoming a competitive edge for us, which we are actively utilizing. In Q1, we have also welcomed 2 new board members. Mikael Mosko-Andersen, known also from different SaaS companies such as Beneo and Consolidator, and Susanne Lund, whom is the Chief Commercial Officer of Lesser, who's working together with us both on commercialization and new model of go-to-market models and our growth levels. Lastly, I want to touch base on the market update. There's a greater interest happening with all the stuff that has happened in 2020. It is basically digital ecosystem build up. This is every company right now is in conversations in every part of their departments. It's the digital ecosystem, customers in the center, and how do we create a digital ecosystem around that one. So basically, how do we take care of our data? That's the CDP. How do we take care of our content? That's the content management systems. How do we activate all that? That's where Agillic comes into the picture. So these kind of ecosystems, it's the main focus across the board, and our value is coming really strong through that in these conversations, and the interest is increasing into that. And is that really, are we really delivering the promise of best omnichannel company promise and the technology? Now, later this month, Danish Chamber of Commerce, Dansk Erhverv, will be delivering the Best Omnichannel Company Award. This has been going on year. This year, there are 5 nominees, and 4 of these nominees are Agillic platform clients. So we cover almost 80% of the nominations in the Best Omnichannel Company Award here in Denmark. We are wishing all the good luck to all our clients, and we are very strong in that perspective. So what is it that we are looking forward is establishing the same kind of penetration and a footprint in the international markets. That's exactly what we are focusing on, what we are aiming for in the upcoming course. So that's all from me for now.
Perfect. I think, should we go to the questions, Emma?
Sure.
There's a question here. What will you do with the cash in bank? You have 23 million or around that. And also a reminder that it has a cost now to have cash in bank.
Absolutely.
Do we have targets? Do we want to buy something, or is it running the reboot strategy where you are not expecting to have positive cash flow in the start of the period?
I certainly understand. It's a very relevant question. And it was also on the financial paper this morning that all the companies are trying to get rid of their cash. So the important thing here is that as a company, as a technology company, for us, we are trying to create some certain agility. So the investment for us, cash for us, is the investment for growth. So it's basically back to what I was mentioning earlier, investing on our sales activation, go-to-market strategies, and technology development. As our main focus is that. So we are continuously improving the competencies, capabilities, and geographies that we're operating with the cash.
Yeah. So it is for running the Reboot 2 strategy. So
Exactly.
you have sufficient cash there. Yeah, perfect. I have some questions which has been sent to me before the event because he couldn't participate. We will take that and people can just ask questions. You're talking about the growth to the 70 million in ARR in 2022. Which parts, regions do you primarily expect that growth to come from? You are very big in Denmark. Do we have some regions where you see it coming from, or is it broadly globally?
I mean, naturally, there is a waterfall effect of the number of partners that we have in a certain market, the number of clients that we have in a market. Success brings success. So if you look at our current penetration in the Nordics, Norway, Sweden is high, so there will be a further increase on that in these markets naturally much faster. When we look at DACH, we have recently just hired more direct sales team members in Germany. I'm quite hopeful in Germany there will be a good positive impact. In UK, where we have had quite a long history, our pipeline, our prospect conversations is showing the drive behind it. In US, we have established already a business development partner related go-to-market strategy. It is in progress. So it is basically, I wouldn't say it will come from this market versus another market. We are focusing on these focus markets. We don't have many, we have few, but our focus is really, really high with our partners, with our direct sales focus. So our 70 million target is mainly driven from these markets that I've just mentioned.
Perfect. And there's a question here, congratulating on your EBITDA positive results. But he's also mentioning it comes with reduced cost. You have cut down on your staff. Can you comment on which type of operations you have cut those costs in? Is it the more forward-looking or the more backward-looking? Is it R&D and the sales, or is it more on the administrative? Is your balancing to a new reality hurting your future? I think is lying a little.
Yeah, I certainly understand. It actually sounds very much like we have been. When you look at our EBITDA, when you look at our P&L, you will feel like, oh, this is a cost-cutting exercise kind of thing. It's absolutely not. We're actually, if you look at our website, you will see that we are looking for multiple new talent. And there's more coming up in that space. What we are doing is right now we are organizing our structure based on our Reboot 21 strategy and our future investments. So we are actually investing quite a lot of money on our new staff that is on sales, that is on technology. And if you compare our technology Q1 last year to now, it is almost the same kind of amount, but it is the locations are different, competencies are different, capabilities are different. So we are very much growth-driven and investment-driven company right now than ever before.
Perfect. There's also a question here from someone who couldn't participate. The Corona situation has created a new situation. Everybody needs to be digital. You touched a little bit on the webinar you mentioned with the partners. You actually mentioned some very, very high growth rates in the MarTech. But are you starting to see that also on your business? I know it's a tough one. Are you a little bit later in that? But are you starting to see a high interest from your customers? And maybe my question is, very high growth rates in the MarTech market. You have a little bit less growth rates. Are you lying in the next where they will start by the easy solution, maybe some SMS push, and then starting to look further on? Are you seeing some of that already starting to feed into maybe your pipeline, your possibility, your speaking, your talks to clients?
Right. Very good question, actually. Let me put it this way. There is no one-size-fits-all answer to this question, because every market, every industry, and every company is operating in a different perspective. Every company has a different ecosystem. So their readiness for welcoming the new realities, it differs. Some of our new clients that we have recently, I've mentioned that we have had 5 of them in Q1. They're all in different stages. They're all extremely eager to activate their data, activate their content as quickly as possible to the market realities that are happening at the moment. And then you have geographies. In different geographies, different regulations, where the life that we are living. On this side of the planet, we are opening up now. This Saturday and this weekend, people will be able to go to fitness. And I've been speaking to people yesterday in UK. They haven't been in the office for 1 year. So I don't think it will be possible for us to say MarTech in general, this is where we are. It differs from market to market and industry to industry. What we are trying to do together with our partners is to maximize the impact in each industry, in each market, with our agile way of delivering fast time to success solutions to our clients. And we have a conversation going on with a fitness company in I won't tell you more than that, but in a digital environment. I mean, they're coming up with a totally different way of doing business due to the market realities. So basically, new realities, new ways of doing business, agility pays. There's no one-size-fits-all answer for that.
No. So I think you also elaborate a little bit on it. You are starting to see much bigger interest in this space, but it still has to be seen and implemented. Perfect. Then I have a question also, and I think I know the answer, but I need to ask it anyway. If we're looking at your valuation, you trade around 5 times IRR. If you look at your goals, you are trading around 3.5%, and the market is trading around 14.5%. Some explanation, some of your thinkings. I know your standard question probably, but do you have any thinkings on what could change that picture there?
I mean, naturally, I'm not in a position to comment on the market valuation. That's Marcus' choice. But our focus is very simple. We, as the management here, we focus on creating the growth through our geographic expansion, through our industrial in-depth growth and footprint in the new markets. As long as we create the ARR growth, I believe there will be some adjustments on the valuation going forward. It by itself is a natural way. That would be my comment so far.
Yeah, and I think you elaborated on it. Looking into the sector, there is a clear connection between growth and what prices you are paying on an R multiple. So I think, at least looking from an analyst side, you are focusing on the right thing. Growth, that's what drives up the multiples.
Exactly.
Then I have a little bit, I don't know whether it's a nerdy question, but 89% gross margin. It's high even in this space. I know they are high, but not this high, and I know that creates, if you get your engine to work with customers coming in and churn getting lower, then it's a humongous value driver. Is this sustainable, or is it especially high for some reason in this? Or can we see you staying at a higher level than you historically have done on the gross margin? That is kind of my question.
I think the answer will be we are the way that we are driving Agillic. It's not just 1 or 2 financial parameters, but we're trying to achieve our success across multiple parameters, and our margin is also one of them. Now, the reason that we are we call ourselves that we are fully scalable, we are fully global. That's one of the reasons that is our margin is also high, and as much as we can bring the new clients and the ARR growth, the margin will be in a stable, in a high end of it. But that's not the only focus from us, because we also focus on growth through sales improvement, technology innovation, and new partnerships. So every parameter works together, but we try to do this in balance. And to simple answer to your question, it is very important as long as we achieve the other parameters too.
All the parameters too. Perfect. And let's end by last questions. Have you seen a change on the shareholder list? I'm not sure you can elaborate on this. You have a shareholder list after you have received cash. Are all shareholders selling? Are you seeing some changes on your shareholders since you received the money?
I believe in our company announcement back in January, when we have done completed the capital raise, in our publications and our conversations, we have mentioned that there are both institutional and private investors came in. We have also mentioned that there are local and foreign investors came into our shareholder portfolio. So we are actually quite happy about that. I'm sure the question can be answered in referring back to some of those company announcements. There will be some details that.
Yeah, I think he's also asking you to look at whether some changes has happened in your book, and I don't think you should go public with that, but good try. So it is a good try. I'm unfortunately pretty sure, because he's asking after the period. Whether you could share how your book looked like, and I don't think it's much changed since that time. Can you say around that? It's around the same shareholders you had at the same, you might say, group of shareholders since the raise. Perfect. Yeah, but I think that was the last question. Thank you, Emma, for taking us through Q1, and thank you for. And of course, you will always have to, if you want to.
They're always, I'm very easy to find, and you can also follow us on our investor relations channels. And thank you very much again for a good chat.
Thank you. Bye-bye.
Bye for now.